All right, welcome back to the Wealth Juice podcast. We got a duo on here, Ty and Nick from Milwaukee, Wisconsin. These guys were just in our community giving like just unreal knowledge of the market in Milwaukee. So we're going to get into why that's such a great real estate market. But before we do all that, I just want to get into your background, how you became real estate investors, how you got into the brokerage game. And, I love chatting with people who are from different walks of life in different parts of the country. So I appreciate you both coming on here and sharing your story.
Yeah, definitely. Thanks for having us out. I mean, I'll kick us off here. Ty Ash, originally from Iowa. I think you'll hear a lot of parallels between Nick and I's story and how we eventually kind of intersected. But from the Des Moines, Iowa area, I actually grew up. My parents did some real estate investing, so my first taste was, my parents bought some duplexes back when you could buy something for $100,000. Put a 30K credit on it and get it back at closing and then go buy another one, essentially no money down. But they survived the old recession. But I never really thought about real estate investing again until I moved up here to Milwaukee. One of Nick and I's mutual friends was telling me about this thing called Bigger Pockets and we should buy a duplex. And I'm like, well, my parents did it, so I guess I could probably figure this thing out. And that was kind of our foot in the door into real estate. Was actually real estate investing first, using the house hack strategy. Personally, I've done that 4 times, one with a buddy, a few with my wife. Now we're up to essentially, 4 duplexes and then a single family. But then I've got a couple partnerships, one of which is with Nick. So that's kind of what got me rolling into real estate. I'd say we've done it all. We've done some burrs, we've done some flips, we've done some house hacking, out of state investing with some properties I had in Iowa that I just 1031 exchanged. So I'm kind of going through those layers. But now, main thing we do today is real estate brokerage, like you said. So we help all buyers and sellers, but we also have a niche in our business with investing, which is obviously one of the things we'll probably touch on.
Love it. Nick, yeah, I'd love for you to share your story and then also like how you guys intersect, maybe at what time frame that happened.
Cool. Yeah, thank you, Cory. Thanks for having us on here too. I'm excited to be here. Yeah, Ty and I have intersected twice now, I guess. The first time not knowing it, and then the second time knowing it. So I'm also from Des Moines, Iowa. Been in Milwaukee now 8 years, and Ty and I, we went to rival high schools. We actually played each other in football in the semifinal game, going to the championships. And there's actually a photo of Ty either tackling me or both of us are on a pile. And I'm like, dude, I'm number 36. You're like, I'm number
31.
48. I'm like, well, there we both are. My team ended up winning, but regardless of the point. So move out to Milwaukee. And I always kind of knew that there was something that I wanted to do financially, like in the financial freedom, something in investing. I don't really know what it was. I had a good friend of mine that was living out here. Him and Ty worked together. They just started house hacking. It was the first duplex they bought. I go over there and I'm like, dude, I got to do this. Like, this is what I've been looking for. I've been renting an apartment for a while and I was ready to kind of just take the plunge. And I'm like, if you guys can do it, like, I'm just a little bit less smart than you guys are. I can probably figure this out as well. So bought a duplex, did the house hack thing. Then bought a second duplex that I'm house hacking now. And then bought a 5-unit close by with a commercial loan. And then somewhere along the way, Ty and then our other buddy we're talking about, Tim, we all partnered up and started to do some flips. And then somewhere along the way, Ty and I got our real estate licenses. We went full-time as realtors, started a team here called Horizon Homes, and then have done more flips, more burgers, Airbnbs, kind of everything under the sun. And so it's been crazy how meeting you, Ty, going to your guys' duplex that one time turned into this, like 10 years later. Like, I never would have thought that we would be like best friends and doing this every day, or also that I look at my lender for my commercial loan, just asked for like my personal financial statement, which is always fun. And just seeing like in 5 or 6 years, the net worth gains you have from just not even 3 properties, but just let alone 1. And doing this full time and just talking about real estate all day, every day, what I love with people and helping them do it too. It's incredible. And it's kind of a dream come true to do this. So that's kind of my quick background here.
Yeah, it's awesome, guys. I love the partnership aspect. I mean, you kind of remind me in a way of Ryan and I. Like, so I say this with a caveat because I'm not like some master real estate agent, right? I've only been doing it for a year. I've gotten a lot better at it. And I've found that the best agents that I know actually come from the investing world. And there's probably only about 5% of agents that I know that even invest, which blows my mind, right? But like, I have felt like I've had such a leg up on the transactions, the negotiation, and how to put deals together, whether it's even just your primary residence, like that aspect. And you guys started out in that realm. And I got to like dozens of units before I even went the agent route. But how much has that part of your story, and you can start maybe with Ty, just how much of that has springboarded your journey into the agent side and the brokerage and building that?
Yeah, the transition from being a real estate investor and even just a homeowner, then moving into the real estate agent space. I mean, it's such a leg up. Just like knowing that you can speak to somebody if you're new on the street as a realtor and say, like, I have bought a home. I understand. I can be empathetic towards the journey of it is just like by itself. We have like some young realtors on our team. I'm like, the faster you can buy a home and actually speak from personal experience is everything. And that's the same with working with investment clients as well. If they know you're an investor and you can walk the talk, like that is a huge leg up. You know, you're a year into the business. I'm 4 years in, and Nick is like 3 years in. So like we're not, you know, again, like these 20+ year experts. However, the experience we've brought from the investing world and buying properties and like knowing what happens inside of properties is a huge leg up. And it's led to us being able to coach new agents on how to do it the right way. And like our team will probably serve over 200 clients this year. We're going to be a top 10 MLS, you know, team here in the Milwaukee greater area, not from like connections or anything else. Like we're not even from the area. It's just doing business the right way from how we wished we were served back when we were buying our initial deals. Like we speak about that all the time as like leading with empathy. What was it like when we bought a home, and how do you do it really, really well?
So if you've ever tried getting a mortgage, which I'm sure many of you have, you know how daunting and discouraging it can be of a process. The slow process, paperwork, being told no without any real explanation. One time we were even told that taking out a home equity line of credit on an investment property wasn't even possible. So that all changed when we were introduced to Neo Home Loans. What makes Neo different is literally how they approach lending. They're not just checking the boxes. They're legit problem solvers. They look at your entire financial picture and explore multiple angles, literally until they find a strategy that works. They helped us reposition our portfolio, pull out lines of credit to scale, and structure everything for long-term growth. And on top of that, their rates were some of the most competitive that we've seen. They just literally did whatever it takes to find a solution. For us, Neo has become our liability advisor, the same way you have a financial advisor on the asset side for the liabilities. If you're serious about building wealth through real estate, it's worth sitting down with them and getting your lending strategy dialed in. If you want to book a call with them, click the link in our show notes. Their team is unreal, but don't just take it from us. Find out for yourself. Yeah, that's great. I'm curious on the actual strategy on maybe a couple of your first deals, and maybe we can go to you, Nick, but just like what that looked like when you started to buy real estate, and maybe we can parallel it to how people would do it now. And this is kind of some of the things that I tell people when they're getting started in, you know, house hacking or investing. They're like, well, it doesn't work. It's 6% interest rates or whatever. I'm like, let's back this whole thing up. Like, let's look at it at a bird's eye view. If you're going to rent a place in downtown Philadelphia, is relatively expensive. If you're going to rent a place for $3,000 a month, do you have to wipe out your entire living expense by house hacking? I think that's possible, unrealistic. But
Yeah.
What if you could take your living expense from $3,000 a month to $1,500 a month, and then you're getting all the other benefits, which are way better than the cash flow anyway, by owning real estate, tax benefits, appreciation, principal paid on, et cetera. So I'm curious on the start that you guys had, and maybe just a sample of one of the deals that you've done. Because I know I say this when I ask people because I know it was a few years ago, and yeah, interest rates are a little bit better, whatever. Like there's always an excuse of why people can't do it now. But I just think that it's so possible to continue doing. And I always tell people to get started that way.
Yeah. The first one I bought was a duplex. I was looking at the market. I wish I would have gone and toured more homes when I bought it, but I'm very happy it all worked out. And I remember when I bought it, I was terrified. I was like, what am I doing? Am I making a mistake? The realtor was like, you got to go 10K over. And I was like, God, this is the worst idea ever. I'm going 10K over. This is insane. And I think back to that moment of me being like a scared young male. And I'm like, it was such a great learning moment for me, because I feel like everyone you do after that, you almost become less scared, which I don't know is a good thing or a bad thing. I almost wish sometimes I still had that like fear in me when I'm going to buy a property. But it was like, I think back to that because every client I work with that's buying a first one, it's what they're going through a lot of times too. You kind of see you've got two kinds of people when it comes to investors. You've got the ones that are head down in the spreadsheets down to the 100th decimal point. And then you got just the vibes people that are like, yeah, this feels good. I like this. And neither is right or wrong. I think like almost the hardest thing to do is going from the podcast and the books to actually buying. Like, I feel like it's really easy to educate yourself when you kind of get caught in this loop of the education game. And then eventually you got to start taking action to do it. I don't think there's a right or a wrong way, whether it's to be spreadsheet focused or not. I think you can't take advantage of anything if you don't have a property to begin with. And that's like the most important piece with real estate. It's changed my life from just like the net worth I've seen. And yeah, when I bought them, interest rates were a lot better. I think about house hacking just because Milwaukee's got such a great market for house hacking. We have more duplexes here per capita. You can live in just about any location you want, any type of location you want. You're going to be paying to live somewhere no matter what, unless you're with your parents in their basement, which if you are, hey, go for it, save up, keep doing it. But you're paying no matter what to live somewhere. It's also interesting, like talking to young homeowners. I know I'm kind of going off on a tangent here, but a lot of their parents think of buying a duplex as being so risky, which is really interesting to me because it's so, I feel like we're all kind of raised and taught to go to college, get a job, buy a house and succeed. And buying a duplex to me is way less risky than buying a single family home. You have way more options. You have someone paying your mortgage, paying your rent. And kind of my rule of thumb with house hacking is always live in an area you want to live in a home that's in good condition. And the numbers have to make sense to some level. You know, like you're not expecting to house hack to cash flow a ton, but you're getting in to get a start, get a taste of, do you even like doing this, like managing one unit. I don't know if that answered your question or not, but that's kind of like
Dude,
what I think about.
And I love what you're hitting on, Nick, is like, it's scary coming in. And sometimes it's hard because you're working with a realtor who's going to get compensated at the finish line. And sometimes there's like some, being cynical coming into it. What I said with like my origin story is like when I was trying to buy my first duplex, here's like some of the rough numbers. It was like $350K purchase price. We went over asking sight unseen. We had just lost out on one. And we were still going to get a home inspection, so it wasn't like that high risk. But I analyzed every single deal in the MLS. I couldn't find anything. And then this one popped up when I was still working my W-2. I'm like, this is the most amazing deal I've seen in like the last 4 months we've been searching. We have to get it. So we got it locked up like 10K over asking, just like you, Nick. And sight unseen inspection was the next week. And my parents were essentially, again, they had bought, 10 duplexes and like they said, this is a bad deal. Like it's way too expensive. You're getting in over your head. Again, real estate investors. And the numbers actually came out to, it was me and my buddy, both of our girlfriends. Mortgage was $3,700. The downstairs unit was at $1,400. We were going to be living, it was $2,700. We were going to be living for like $250 a person on this house hack. Again, this was 8 years ago. I'm like, Mom, Dad, I don't know how this could not be the most amazing deal. I'm buying it for $8,000 because we were buying it 50-50. Like, that's one of the main things overall. Sometimes like where you get your advice from matters. And I think that's what I love about what you guys do here on Wealth Juice is like, you're giving good advice for the people trying to get their first deal and kind of get momentum, because they're going to get different advice from somebody who's really experienced. Never do this. And it's like, yeah, my parents had bought multiple deals and they're trying to say, don't do it. That deal is insane with 3.5% down at this point, like over $1,000 a month cash flow on very high leverage from the beginning.
And I bet now, like, what'd you buy that property for, Ty?
It actually appraised low at 320. We paid 330, and we actually did a 401k loan to split the difference of 5K, so like 330K. And
what's
doing all now? The bad, it's probably worth 550 now.
Okay, that was really what I wanted to get to. And when did you buy it? How many years ago?
8 years ago.
8 years ago. Okay, so who cares if you paid 10K over because you just got 200,000 plus? The reason why I kind of bring this up is because I think what I'm disappointed about online is seeing a lot of I don't even like to use the word gurus, because some of these people have really built something for themselves and they are smart, but marketing is just odd to me when they're like, go buy property, Section 8 across the country, no money down. You need no money to get involved in real estate investing. If somebody tells you that you need $0, they're lying to you.
Yeah.
Or they don't want you to succeed because they don't think that you need reserves, or they don't think that you need something to have on the side. However, this game is so forgiving, and the longer that you hold, the more money that you're going to make. And it doesn't mean that you shouldn't sell a property after 4 years when your return on equity drops, but it just means that if you buy a property 8 years ago, but you feel like you overpay, chances are 8 years later, it's going to be worth significantly more, and those numbers are going to come out in the wash. It's not going to matter. It's similar to my property. I bought a 3-bed, 2-bath for $250. It was in the market for $255. I paid $258, and I almost said, I don't want to pay $3,000 more. $258. Like, what are we talking about here? I knew nothing. So I don't know what I was even thinking. Now it's worth $415, right? That same property that I still own. So the problem with what you said, Nick, is that people will sit in the spreadsheets forever. And I've talked to people all the time who are like, I'm not ready yet. Talk to me in 6 months. I'm not ready yet. Talk to me in 6 months. I'm like, you don't get ready by believing that you're ready. You get ready by doing, and then that rush of emotion gets caught up. You decide that you're ready. You don't feel it. You decide it. And I think that's just like, sorry to get on a tangent here, but I have a lot of these conversations with people who think that there's somebody knocking on your door, waving a flag saying it's time, and it never will be. So
sometimes you just get lucky. Like, I was literally less than a month away from signing a lease on a 1-bedroom apartment with my girlfriend, now my wife, for $1,400 a month. So like, we're about to be paying $700 a month each, versus like, I had done all this work leading up to it. I think that's like that. How do you get out of the spreadsheet is like watching the market. And if over a 3-month period, you analyze a couple deals a week, and if you look at the last 3 months and something pops up that's like in the best 3 deals that have already gone under contract and closed, like, it's not about going and replicating what Nick or myself or you did, Cory, 8 years ago. It's what's the best, like, highest percentile deal I can find today after watching the market for 3 months, and pull the trigger if you have the money and you have the reserves. Like, you just have to buy with what we have today if you have conviction that this is the right business and the right investment model for you.
We also talk about this too, that like why you're doing it. And this is the first question I ask any investor that I speak to is like, why do you want to do this if you haven't done it before? Like, what does this mean to you short term, long term? And remembering why you're doing this, I think, is something else to get you out of that spreadsheet. It kind of overlooks any fear or nervousness that you have. Is like, you're doing this because of what happened with you, Ty, the equity that you built. Same with you, Cory. Like, that's why we do this. And don't forget that.
Yeah, without a doubt. And I think, this, I don't know. I just want people to hear this, like, from other people who have started on, 7, 8 years ago. And in 2018, when I purchased, people said we were at the top of the market, that it was a bad time to buy, So just listening to some random narrative that you hear from your grandmother or your uncle who's never even bought real estate, or even people that have, but that bought it a long time ago, is not always the best idea. It's to get around people who are doing it every day. And I believe firmly that there are deals on the MLS in so many markets. And the reason that there are is because people think that they're not. People think that there's no deals in the MLS. So they're like, they're not even looking there. Now, are you going to get the best possible deal? No, you probably have to go direct to seller to get the best deal, but there are deals in the MLS, and the people they spend 5, 10, 15 years skipping over good deals to try to find great ones that they never find. And to me, it's just like, I'll shout that from the rooftops all day.
Yeah.
But I want to talk about Milwaukee. I want to talk about like this, this market to me is, there are deals on the MLS that cash flow. You can still hit the 1% rule, but it is an appreciation market. It's kind of like, I equated this on our call the other night of like what's happening in New York and Philly. New York, if you're a first-time investor, it is tough to invest in New York. You can house hack, not in the city, but you can house hack in the some of the boroughs up there 100%, but it's still extremely expensive. But you can buy a property and literally get the same amount for half the price in Philadelphia. And I've seen a little bit of Chicago to Milwaukee similarities, distance-wise, about an hour and a half, price-wise, where people have been that lived or have worked in Chicago are like, oh, I can go buy this duplex in Milwaukee for $240,000 and I can rent one side out for $1,500 and significantly reduce my mortgage, or just buy it at a state, because you guys have a team where you can help out-of-state investors. So I'll let you guys share it, but just tell me about Milwaukee and why you feel like it works demographic-wise, inventory, all that.
Yeah. Why do we love Milwaukee, Nick?
Yeah.
Take it away.
Yeah. So when I talk to investors about Milwaukee, first off, it's a beautiful city. I think it's very much forgotten. It's very much a sleeper city. When we did the presentation with you guys, we just had some photos of the skyline. Some people were commenting like, wait, is that really what Milwaukee looks like? It's a gorgeous city. It's on this giant lake. Might as well be a beach. Like it's beautiful. But from like an investor numbers wise, there's 5 things I see. Number one, it's really affordable. You can get a duplex for $250K here in Milwaukee. That's in good shape. 200 to 250 is kind of the range for good condition duplexes, depending on where you're looking. Rents are competitive here. We're typically in the top 5 to 10 from a metro perspective based on competitive rents. That's rents going up. That's how many applicants per rental unit. That's vacancy rates, all of those things. And you put those together and you've got cash flow, which is kind of what people want to see the numbers work. It's landlord friendly. I think our rules are very fair. You can't just evict someone because you feel like it. Like I think Arkansas has that where it's just like, hey, get out. You can't do that here, but there's also no rent control. There's no squatters' rights. There's no things like that, which is what a lot of people tend to be worried about. But Milwaukee's a very, very stable market. It's one that appreciates. We've seen about 6 to 8% appreciation year over year for the last 15 years. And we have very much a shortage of inventory, meaning there's just not enough homes to sell right now. And we have a strong demand of buyers. So we don't see prices changing here. The only way I see prices changing in Milwaukee is if there's something that's affecting every single market in the US and prices are falling in every market. It'd be very hard for Milwaukee to be a market where prices go down while all these other markets are continuing to go up just based off what the inventory supply and demand levels look like here. You have a lot of options, I would say too. Like you've got the full gambit of locations in terms of great neighborhood duplexes or maybe riskier neighborhood duplexes. You're also able, like flips are really tricky to find here, but with the appreciating market, you kind of get this extra lift from just prices going up, where if the numbers are kind of tight when you buy it, you do a project in 6 months or a year later to do that cash out, you've got that extra just tailwind in your sales of values rising, which I had a client that actually just bought a single family house a year and a half ago, just did a cash out refi, didn't even do any work to it, got 25%, got 75% back for doing nothing, which is insane. So that's kind of like the nutshell of Milwaukee, I'd say here.
Hey, let me pause the episode real quick. Let me know if this sounds like you. You're making 6 figures, you're climbing the corporate ladder, investing in your 401k and your Roth IRA, and maybe even a brokerage account. But deep down, you're asking yourself, is this really it? Like, am I just going to do this thing for the next 30 years and hope to retire in my 60s? That was exactly us just a few years back. We were curious and excited about real estate, but overwhelmed and without a roadmap. If you fast forward to today, we've built a portfolio of over 80 cash flowing units and grown our net worth to over $2 million. We made it our mission to help busy professionals like you take that same leap and start building generational wealth for yourself and your family. That's exactly why we created the Wealth Juice Inner Circle, a private real estate investing community designed to help you get your first rental property under your belt in as little as 90 days. Inside, you'll get direct access to us, our full investing network, private off-market deals, and our exact playbook, and a community of investors who are closing deals every single week. That first property changed everything for us. We always talk about it. It was the true foundation for building generational wealth. And honestly, if we had access to something like this when we first started, we'd be 10 times further along by now. So if this sounds just like you, click the link in our show notes and schedule a call with me. Yes, me. I'll be taking the calls. We'll go over your goals, map out a plan, and get you ready to close your first deal. Let's get it. Yeah, love it. I found we have been researching different markets for our investors in our community to go into, because I think there is this fear to invest out of state. But if you live in New York or you live in Seattle or you live in California, if you can get in those markets, do it. Like, you're going to see a massive appreciation. It's great, but it isn't meant to be political, but if you're starting out, it's easier to invest in states that are more red, and red typically means to be landlord friendly, like straight up. Like, it doesn't matter what you think about politics. It's just like, it's a little bit easier. It doesn't mean you can't do it in blue states, but it's just like, for example, I started in New Jersey. It's one of the hardest places on landlords, more tenant friendly. That's fine. We still started there. We still grew our portfolio to 8 units. PA is a little bit better. And I invest in Vermont, New Hampshire, which is a little bit like Milwaukee, where it's kind of split. And I think even more, it's probably 50-50. It's neutral. So I think if you're starting out, going to states like Georgia and going to states like Indy and Wisconsin.
Ohio is what I hear all the time too. Like throw a dart at Ohio and there's a market right there, it feels like also.
Yeah, think about it. If you can have this conversation that we're having right now in different places, like across, thousands of miles away, 1,000 miles away, if you can create a team and build it boots on the ground, and you trust other people to do their job, you can build a portfolio from a distance. And like the majority of my portfolio is, I've 2 properties in PA now, and they're one in Florida and the rest are in Vermont, New Hampshire. So like you can do it. Anybody can do it. I'm not that smart. It's just, so I encourage people to think about Milwaukee as a market of like, well, yeah, I'm a duplex in Palm Springs or LA is going to be $1 million. If you have the dollars, I think it maybe does make sense to get in there. Like you could put your money to work and see the higher appreciation. But if you have 50 grand or 100 grand to start, I 100% think that people should be eyeing this up. So I'm sure you guys have maybe something to add on to that.
And I like you're kind of talking about like the price point of a duplex in a a more expensive market. I think one of the things I like that kind of dovetails off what Nick was talking about a moment ago of like the appreciation of Milwaukee, which then investors, they always have like this, like, okay, well, what's the catch? Like, is this going to fall out from underneath me? That low inventory is driving prices, but like we have such a predictable market. And I know most investors, we've all been taught for years, whether book or podcast, never bank on appreciation. We do run our numbers at like very conservative, like 3% rent price growth, 3% appreciation, but we're at like almost half the amount of inventory that we used to have at any given time back in 2019. So it's something you can predict on. Here's the other tailwind that our market has is you look at a duplex in let's say Chicago, which is very close by, and you've got a single family home in that neighborhood, and then you've got a 2-flat in that neighborhood. Cory, you're probably like, of course that 2-flat costs more for the same amount of bedrooms and bathrooms. I just bought a duplex in Wauwatosa, one of our A markets here in the area, and it's a 3-bedroom, 2-bedroom combo, 5 total bedrooms. 2 blocks away, I sold a single family home, 3-bedroom, 2-bath total. The single family was $460,000. The duplex was $450,000. Every other market out there, like you see these like discrepancies where duplexes are more expensive than single families. But for some reason here in Milwaukee, and probably because of the quantity, we're going to see that be as like Milwaukee becomes less affordable. Today, it is very affordable overall. You're going to see that imbalance change where people have to move to house hacking. They're not going to call it housing. They're just going to call it home ownership. And that is a huge tailwind for our duplex market here.
You're in the beginning stages of that still in Milwaukee is kind of what I'm hearing, is that you're in the stage of like, we're still on this upward trajectory. And like, for example, in San Diego, there's a lot of ADUs. And the reason that they've created ADUs is because it's so unaffordable to purchase a property. So they're saying, we're going to have to build on existing lots, and we're going to allow homeowners and investors to build on existing lots because we have to build properties because the unaffordability is just, it's out of control. Now, people are not necessarily San Diego, but California, they're exiting, they're going to Texas, they're going to Florida. But I also think that there's a portion of the country that's going to markets like Indy, like Milwaukee, like Ohio, that are trying to, I wouldn't say downsize, but just go into a more affordable place. And we interviewed a couple people on our podcast who moved from California to Indianapolis because it's not just the housing, but the cost of living is like you can get triple the amount. So it's something to consider. You don't have to necessarily pick up and move there, but to build an out-of-state portfolio. I've interviewed dozens of people that were in these big price point markets and built 20, 30, 40 unit portfolios out of state. And that's what got their start. And then they got into bigger and larger projects. But I just think it's something that a lot of people should take a look at.
And I don't want to make it, one thing I'll say, if you want to build your wealth, move to Milwaukee for 2 years and house hack, you can buy a super nice property for $25,000 down. And you live in it for a little bit, you enjoy Milwaukee, maybe you snowbird because you can't handle our winters. Like, it is an ultimate tool. If you want to like build an out of state portfolio, move here, do it. There's other ways to do it, but it's hard to argue against moving somewhere for 2 years that actually is enjoyable to live in for 25,000 versus spending $90,000 down for the exact same asset. Like, that's the ultimate hack of house hacking, is leverage of a 5% down loan to go and acquire asset. Now, that's pretty extreme for somebody to do it, but I promise you won't regret it, even if you just did it one time your entire life. It's that launching pad that we all experience, that it isn't that hard to do.
And you get to hang out with Ty and I if you do it too. And
how about
added
that,
perk
guys?
right there? That's worth more than anything. I think the out of state piece, like the hardest part about investing out of state, and I've never actually bought out of state before. Like I work with tons of clients that invest out of state, and I feel like it's, you maybe know the city, you maybe don't, maybe been there, maybe haven't, but you're just looking at this map. You see all these listings, and it's conceptually, you kind of have no idea what this all means. And then I think a lot of people will start kind of exploring 2 or 3 out of state markets, and they're kind of exploring it at the same time. My biggest recommendation for out of state investors is do your analysis of the markets, choose your market, and then go all in. The more that you can go all in on one market once you've kind of solidified it, the more that you build that relationship with a realtor, with management companies, with contractors, the better it goes. The more that you kind of start trying to go into 2 or 3 markets, and if you don't have the time to do it, it becomes really tricky. If you do have the time to do it, go for it. Ty and I also spend a lot of time with out-of-state investors, kind of giving them the best sense of what the different neighborhoods are. We do a screen share. I kind of look like a mad scientist, and I draw on my map and say, this area, X, Y, Z. And I find that to be helpful too. And all the tours that we do as well, it's all video recorded. And we basically talk to ourselves as we're going through these houses. We get back in our car, we put together this condition report of here's what the interior, the exterior, the foundation, XYZ looks like. And I tell every client this too, that we care that we want you to build a portfolio. We want you to build a real estate empire. And the first purchase you make dictates what direction it goes. If the first one goes well, you typically want to buy more. If the first one goes bad, you start going, why did I ever do this? Why did I listen to Wealth Juice? Why did I listen to this podcast with Nick and Ty? And you never do it again. And that's unfortunate because you don't get to see the benefits of it. And we take that very strongly to make sure that you want more. And that's on us to make sure that we're extremely clear with whatever it is that you're buying, because we want you to succeed. And I think if the expectations of what you're getting are different than what they actually are, that's where all the challenges arise. So we're very honest and blunt when it comes to buy this one or, hey, this one sucks. And yeah.
Also, it comes down to your tolerance level too, because you could say that somebody buys a bad deal, but it's only a bad deal if there is deals that are just bad, but sometimes it's only a bad deal if you allow it to be that. And I like Definitely. My first property, 3-bed, 2-bath that I just talked about. Day 2, I came into the property and there was 2 inches of water in the basement, and somebody had flipped this property before. And I'm not trying to I think they knew, right?
We all know what happened.
Yeah, they knew. And they were like, hopefully it doesn't rain before the final walkthrough. And it didn't. And then it rained 2 days later. There's water in my basement. I've spent, I would say, probably $8,000 in total trying to fix that problem. And I did fix the problem. So I did, French drain. I redid the gutters. Finally, the thing that actually worked was regrading outside. Okay, $8,000. Would I, if I was in the middle of that moment thinking, man, I can't believe I bought this bad deal. I had to spend $20,000 to get in this deal and then another $8,000. I'm breaking even on the rent, but I just spent another $8,000. I might as well have paid rent. Well, if I didn't factor, would you pay $8,000 to have $200,000 or $150,000 of equity built into a property? Would you pay $8,000 for $150,000? And like anybody that's doing any simple math would just yes. So now it took me 8 years to get to that equity point, but I think when you say a bad deal, it's all about your tolerance in the time of when things go wrong, because they will. Inevitably, things do go wrong in real estate. That's why we don't sell get rich quick schemes here, because you're not going to be sitting on a beach in a year, but I can literally guarantee you your net worth can double and triple if you do it long enough. And
absolutely.
This is something that Nick kind of reminded me of, that I tell people every day. And Cory, I think you just defined your moment of this is are you the type of person that when crap goes wrong, you fix it and you persevere? Or are you the person that like balls up in the corner and you go to mommy daddy? Like are you the person that is going to develop yourself and become problem solving oriented, or are you going to focus on just the problem? And I have a problem. If you're the person that can solve problems, like, you will be successful. Are you the type of person who is successful in everything you do because you put your mind to it, or are you not? And if you can like be very clear with yourself, then like you will succeed.
Yep. And especially if you talk to like, this is why and I say mentorship, but just networking in the rooms. And whenever I say networking, I feel like people are like, what do you like? I'm not talking about going around and handing business cards out. I'm talking about when you really truly build connection and relationships with people. And that's why I recommend everyone starting a podcast, because you and I we've chatted twice in a week. And now I know if I have anybody that I need to send your way in Milwaukee, I have two guys that I can call. And I would think that you would think that in reverse in Philadelphia. Like, so that is the relationship building. And I can, even if I just had a question about an issue with the property, it's like, you need to surround yourself with people who have seen this and done this. And it'll tell you, dude, can you stop crying about this little thing? Because it's $1,000 that you need to have reserves for, and it'll get fixed. And that's it. Not like, woe is me. Right. And, part of this is a little bit like pep talky, but like, that's it. If you're around people that are doing it at a high level, that understand that problems arise, you will be able to navigate those problems better. If you feel like you just want to do it on your own, when a problem comes that you haven't seen before, you might crawl into a ball because you don't know what to do. And that's why getting in the rooms, to me, is like paramount.
And we see that on our real estate team all the time. We've got a guy on our team who just is crushing, young guy. And every time that something comes up, even though he probably knows the answer to it, he always calls Nick, and then he calls me, or vice versa. And he gets both of our opinions. He doesn't say, hey, I called the other person, but we know he does it. And most of the time, Nick and I share a different solution to the problem because we think differently. We have different experiences. But then he actually then builds from like networking. Obviously, it's like within our real estate team, he finds ways to solve the problems that he has through his community. And I think that's what's so powerful about that is like, Cory, I could call you about a tenant issue, and I could call Nick, and you're going to have two different ways of solving it. And then I'm going to now build my own flavor of how do I solve this issue going forward in the future. And that's how you become that person not balled up in the corner. It's like you have other people that can drive you past obstacles.
Yep, without a doubt. I want to get into your goals then, because you guys mentioned starting out with smaller properties. Nick mentioned buying a 5-unit, guys trying to maybe partner on bigger deals, which I actually, after being in this game a little while, realized that like I wouldn't say it's easier to buy an 18 unit than it is to buy a duplex. Like, people say that, oh, just go buy a 32 unit. Like I'm Grant Cardone. No, but it is better. And once you learn it, it is actually, you could make an argument that it's easier, because now for me at this 18 unit, when I have 5 vacancies, which we just filled 4 of them, 5 vacancies, we're still positive cash flow. Right. And not as much as we would be when there's 18 out of 18 or 17 out of 18, but I'm still positive cash flow. But if you have a duplex and 1 unit's empty, you're 50% occupied. Right. So the economies of scale work in the real estate favor, that if you buy a bigger deal, you're actually, it's less risky. It really, like, just talking about math, not emotions, just math. So I'm not even sure if I'm teeing you up if you guys want to go buy bigger deals, but I'm curious, what are your future goals on the investing side? What are you looking to do?
I'm curious to hear what Nick's future. We talk all day about the real estate team goals. I'm curious to hear what Nick's investing goals are.
I've been saving it for this right here, Ty. It's kind of cool looking back, reflecting on what I wanted when I first started this to what I want now. And I think when I first started doing this, I'm like, I want to get to 30 doors. Like, I need to hit that number. I want to be doing 10 flips a year. Like, I want to be doing burrs, all of these things. And we've done 6 flips. I was trying to think back to all of them, and we've done well on all of them. I don't know if flipping is really our forte. It's very much active, and we both have very demanding jobs day to day. I'm all about trying to remove stress in my life. That's kind of, I feel like, the point that I am right now. And real estate is part of that. That's income that comes in, that's building wealth. That's my retirement. That's my future. I'm kind of on the mindset of, I want to have good properties that I don't have to worry about. And if I'm making a ton of money off every month off of them, or if I'm just paying the bills on that property every month, but they're going up in value, but I don't need to worry about repairs, bad tenants, issues that come with that, that's okay to me. That's kind of like the mindset that I'm in right now. And maybe that's not the right mindset of looking to build this massive 40-door portfolio and raking in cash flow. But I love what I do being a realtor. And I see that being a huge part of what I want to spend a lot of my time doing every day. And I love the passive benefits of real estate, but it's only passive if you have the right assets in the right areas. And that's my focus, is doing that. I think what the answer is, though, is, so I'm engaged. We're living in a duplex right now. This unit I'm in is 800 square feet. I can like extend my arm and I can touch my fiance at any given moment, and we need some more space. So it might be another duplex that we buy in house hack and then buy our home after that. Might be buying our home and then a house hack after, or just another duplex after. But that's something in the next 1 to 2 years that we'll be doing. We also just finished a flip Ty and I did that's selling next month or in 2 weeks. We did a cash out refi for a burr that we turned into an Airbnb. So we're still kind of doing those projects all the time. And I think what's kind of fun too is the more that you do, the more you're in the space, the more you kind of just get deals coming to you without trying. Like all the deals that we've flipped, things that we're buying under market, are because we're in this space 24/7. And we're not even searching for it. It's people coming to us saying, hey, my Uncle Bob's cousin's kid is listing his home for sale and he needs a cash offer on it. Could you guys make something happen? And we're like, yeah, we can do this. So that's kind of what we've kind of learned more. And that's kind of, I think, like the focus that I'm trying to get into more is good quality properties, less headaches for me, continuing to scale. But I don't need to have this massive portfolio to be happy, is also kind of where I'm at also.
Ty, anything different in terms of your goals?
Yeah, it's funny walking through it because we're in similar stages. I got married 2 years ago. I just had my first kid 3 months ago. So I'm in the simplicity stage. As I'm saying simplicity, I just sold 3 Iowa duplexes to buy 2 Wauwatosa, which is a suburb here in Milwaukee, duplex, to go from 3 like C+ area duplexes to 2 A class duplexes, because I want great tenants. Which is funny when I say lifestyle or some work-life balance. I literally got an accepted offer on one of those Wauwatosa duplexes in the delivery room with my wife. So I can happily say my son bought his first duplex within about 1 hour of him being alive. I would say my goal.
He was born to do it, man. That's great.
He's born to do it. He's got 2 deals under his belt. He's crushing at this.
Not even wearing a belt either, which is crazy. The crazier part, but.
Here's, I think, the goal, and I think Nick and I are aligned, is like we're really focused on making this real estate team that we're operating excellent, which isn't related to real estate investing, but like once this thing is like dialed in and ready to go, and our staff is doing everything that we need them to do, that creates an engine where we're producing more income. And I think we will come back to like, we weren't even trying, and we flipped 6 places. We did a burr. We've done these different deals, and we would go a month without even looking at our flip, and we still made $80,000 on this flip. Like, we're not even operationally excellent, but we are inside of our real estate business. Get this under control. I think we get to the point where we can probably train somebody for that day-to-day management like we do inside of our real estate business. And we probably go back and scale. It's just not the goal this year. Our buddy Tim, Nick, and I, we've tried doing property management at the same time as flipping, at the same time as burring and running brokerage, and also trying to be good significant others and partners. And Nick and I can't handle not being excellent at what we're doing. So we've cut things out and we're focusing on the most important things. So it's going to come back on the table. I'm trying to talk him into another triplex that I just found that I think is a great deal. We might do a couple wholesales here and there just because we get those opportunities. But I'd say our main focus right now is making sure our clients on the brokerage side are getting really great service, and we'll reintroduce investing back in very soon, because I don't think we can skip the itch when you just know how to do it.
And I guess I got a question. I'd love to get your take on this, Cory, too, because I'm conflicted, because I look at when these things are all paid off in 20 to 25 years, that's my retirement. That's an annuity that's going to pay out forever. And if rents don't even go up, which is crazy to think, that's like a very decent income forever in retirement, And part of me is like, do I need more? Part of me is like, am I happy with that? And dude, that's kind of the internal challenge I have right now.
Same challenge every day of I want to build because it's who I am, but but I want to build that towards like being a good dad and a good husband in today's life. Like that's the biggest battle. I'm having the same thing with you, Nick. Like, is this next 10 years not about real estate investing, but cashing in on the foundation? And I'll come back and revisit this foundation in 10 years and launch off it. Yeah. What do you think, Cory?
Well, the fact that you started, the both of you started in not the time that you did, but the time in your life that you did, is why we share this, is that real estate doesn't give you anything. If it gives you nothing else, it gives you optionality. Mm-hmm. And the beauty in everything that you just said is that you have the option to choose of which route that you want to go. So I don't know the answer, but I do know that the fact that you were able to build a portfolio of 6, 7, 8 doors, whatever it is that my beginning of this journey was 1 a year for 10 years. And hopefully I'll get to like 20, do it for 20 years and get to 20 doors, have 5, 6 paid off, 5 to 6, 50% leverage, mm-hmm. The rest higher leverage that I'm continuing to buy. The 5 to 6 that are fully paid off, $2,000, $3,000 a month, you're talking $12,000, $15,000 a month, maybe a little bit less after you pay some taxes, which is a whole nother thing. That why are you paying taxes after the property's paid off? Not story for another day. But I'm saying like, the optionality, I think the answer for you guys could be in doing what you enjoy doing and optimizing your portfolio for the less headaches and really trying to find peace in that, not growing just to grow. Like we had this property that we sold. We bought it in 2021. We sold it in 2025. The end, 4.5 years we held it, and it cash flowed $700 a month. And on paper, you're thinking, man, that's awesome. It was awesome. But I realized that we actually had $40,000 that we put into the property, and it turned $160,000 in equity after all fees and after taxes and everything. So I'm like, man, I could get $35,000. I got $35,000 of cash flow over that time frame, but I basically 5x that in equity. I'm not living off that $700 a month anyway. So for you guys to optimize, it's like optimize for properties that cash flow. Doesn't matter the number that it cash flows, as long as it does, so you can hold long enough so that you can have $150,000 or a $200,000 exit, and you can actually realize that in your life and go buy a car or go on a vacation or put it away in a syndication or buy another property and trade up. But the optionality, and that's kind of what I want to get back to, is just that's what this game gives you. So if I were you guys, I would think about like, having a staple, a couple of properties that you do hold as long as you possibly can and pay it off, but then also trade up 3 of these properties into a 7 unit or a 10 unit. And then that way you can have all the properties or all the units under one roof. And eventually maybe you do get to a point where you have a 20 unit that actually does pay you cash flow. Like that really can pay you $5,000, $10,000 a month when it's, leveraged in the right way. So
love it.
Again, I didn't give you the direct answer.
Yeah, I feel like I think we're just trying to avoid being boring. Of like, we've made our bets. Like, I've got 5 properties with my wife and I, and I've got a 6 with Nick in partnership. Like, we've made our bets, we've put our work in, and now we're ready to like give back. Like, I think Nick and I both share like, how many millionaires can we make through our clients, whether they're traditional buyers and sellers or also the investors? Like, we will be well compensated if we can make other people millionaires through real estate and teach them the right way to do this, instead of just snake oil salesing them into D markets that aren't actually going to be good for them. Like, we want the best interest, and it's really fun seeing that. And Nick and I both get a ton of enjoyment of that with our team members. One of our team members bought his first house hack. Like, we're teaching people to do what we did, and I think that's where we're getting the return right now is emotional, not monetary.
There is something to be said here about small but mighty portfolio too. And I learned this from Chad Carson. If you guys know who he is,
I follow. That's me. Yeah. That's exactly
right.
It.
So there is, and that's the thing. And I also believe, I think this is a Midwest thing, which I love, like that you guys are from Iowa, which is, there is no doubt in my mind that people are different from all over the place. Don't get me wrong, but there is no doubt in my mind that I have this Northeast, like, just don't stop thing that's like ticking inside my brain. It's like a worm sometimes, because it's not always good. And you guys are like, well, why not get to a place where I feel like I'm in a good spot and then optimize from there and continue to buy at my pace while still doing things that I love? Where I talk to people all the time. I try to hone in on it, and we'll get to this at the end of the show. I try to hone in on why. What is the why behind you saying that I have to continue to grow to be worth 10 million, 20 million, $30 million? I have to have 50 employees. I have to, like, I'm curious on what goes into your head if bigger is not always better. Like, I'm making more money in 2026 than I made in 2025. And we're going to do, I would say, probably more revenue, but proportionately so much more profit because I leaned out. And I'm like, wow, okay. Is bigger always better? I don't know the answer to that. I don't think it is. So this leads me to a question that I ask almost every guest is, and I'm sure your answer is different. What is the why behind what you do? What gets you out of bed every morning? What's the real estate's 24/7. You guys got to be on, you got people in different time zones buying properties. Somebody's, in the East Coast an hour ahead or in the West Coast a couple hours behind. It's like, you got to be on. So what's the driving force that gets you guys going?
My why is I like developing people. Even when I worked at my W-2 job and had my normal job, I loved early talent development. I just love that piece of it. And we get to do that with our clients, which obviously we get paid for at the end of the day, of educating them how to do what we're doing, buyers, sellers, investors. Like, I love educating and developing. That's my why. Like, if all I can do in my job every day is just like show people the path and get compensated to do that, like, I'm super happy about doing that.
Yeah, I would say my why is I don't want to ever look back and go like, man, my life sucked. Like, I don't want to be like 60 and be like, what the hell have I done with my life? Like, I didn't do anything. All these dreams, these aspirations, these hopes, like none of that happened. And then I'm sitting there like, what have I even done? Like, am I proud of who I am? And I think that's like, I want to look back and go, I did everything I could. Anything that I tried to do, I gave it my all with my 100% effort. Because I also think that if you commit yourself to anything, anyone could do anything. I don't think I could become like a WWE wrestler, but like maybe. And so that's my why, is I want to look back and go, I committed to everything I did. I did it as good as I can. I have zero regrets for anything, because I think that kind of scares me more than anything, I'd say.
No. Just want to bring people with us, because I don't want to be 55 when my plan comes to fruition and it's just me and Nick hanging out. We'll get bored of each other. It's like, you got to bring some people with you.
Come on.
No, I get it completely, guys. I think it's, I've read the quotes. It's not the journey. It's not the destination. It's the company. Right. And that to me is like, who can you bring along with you? And you're right, Nick, like, my ship has sailed as a basketball player. I grew up playing basketball. I played in high school, probably could have played in college. Could I make the NBA today as a 34-year-old that's 5'8"? No, there's a 0% chance, negative percent chance actually. But so like, within reason, chasing those goals is like part of the fun. And to say that, like, I can walk into a room and be like, hey, I know Cory, he's here to help. He wants what's best for you. He wants what's best for people around me. He's also not afraid of shit. He'll go he will go and try to make things happen. And he will bet on himself. And he's that type of person who just, it's like, I can always pick up the pieces if things fall apart. And that's kind of, I don't know if it's a why, but it's more so like, if you approach your life like that, I think that people want to be around you. Like, they want to be in the presence of somebody who's just like, I think I can go do this thing, and I'm going to try, and maybe you should jump on my back. I'll take you with me and we can ride it together, the ups, downs, and this roller coaster of what business and life is. So, I mean, I like to get a little philosophical, and I don't know if you could tell, but I've had way too much coffee today. So, I really appreciate you guys coming on here and just like sharing your story and giving us the rundown. I think Milwaukee is a market, I've said it a couple of times, that people should look at as, hey, let's try to build it out here, even if you don't live there. And if you do live there, even better. These guys are great people to know. So I don't know if you feel like you guys have left anything out, any other anecdotes.
I say don't make sure you take action, because 4 years ago, home prices were $250K here. Now the median single family home is going to be over $400,000 at the end of the year. That's a 5-year period, and we have the exact same market dynamics here today that we had 3 or 4 years ago. Like, if you take action and you just buy the right deal and make sure that it's paying for itself, like, it's the basics. It's taking action, getting that first launchpad deal to get to the next one.
You're not too late. I mean, if there's anything that's proven, is that inflation is going to continue to happen. Unfortunately, the government's going to continue to debase our dollar and print more money, put more into circulation. Assets are going to continue to rise. Maybe not in a 1-year time frame, maybe not in a 2. You're seeing the stock market down 12%, whatever that is. But if you zoom out and you continue to buy, and you buy as much as you can, you turn around in 2035, 2040, you're going to be really happy that you did. And again, look at Milwaukee, people. So if guys, this is awesome. If people want to learn more about you, your story, network, what's the best way for people to get in touch with you?
Probably our website, Home with Horizon, right? Is that what it is, Ty?
Yep, homewithhorizon.com. If you want to connect with Nick and I, homewithhorizon.com. I mean, I'll even throw out my own personal number there. Like, again, I love developing people. I give 15, 20, 30 minutes of my time all the time. Hit me up, 515-473-5300. 8417, like, shoot me a text. Like, we don't want to have this like formal loop. Like, just reach out. Like, that's what part of this investing community is. It's at the end of the day, it's actually not that big. Most investors end up knowing each other. So reach out direct. Nick, not sure if you want to be as ballsy.
Sure, why not, man? I got nothing to hide here. 414-335-0823. If you look up either myself, Nick Harrington, or Ty Ash online, our phone numbers are all over the place. Phone call, text, we're on our phones 24/7. So call us, text us, and we will get back to you right away.
Come have a beer with us.
Yeah, that's exactly what it's about, guys. So I appreciate you sharing your story, coming on the podcast, and this was a blast.
Awesome, man. Thank you.
Thank you.
Before we wrap this show up, I want to leave you with this. If you're listening to the show, chances are you're doing pretty well in your career. You're making maybe 6 figures. You're putting money into your retirement accounts, maybe stacking some cash in a brokerage account, but you're still waiting for that next level. And here's the truth. Waiting just costs you time. Every month you're on the sidelines is another month you could have had a property paying you and another step closer to financial freedom that you didn't take. Ryan and I know this because we stayed on the sidelines too long. We talk about this sometimes. We had the money, but not the guidance. And once we finally got our first property, everything shifted. It was the catalyst that built our entire portfolio and ultimately gave us freedom. And that's exactly why we built the Wealth Juice Inner Circle, to cut out wasted time, just give you the exact blueprint and surround you with a network of people who are closing deals every single week. So if you're tired of waiting and you're ready to finally get your first deal, click the link in the show notes and schedule a call with me. Let's map out your strategy and get you moving before another year slips by.